Namaste everyone and welcome to this special Union Budget 2026-2027 conversation. Today I am with Mr. Deven Choksey, who is the Managing Director of DRChoksey FinServ Private Limited and also a very reputed and prominent name in equity and wealth market, having 4 decades of experience. Thank you so much, sir, for being in this show.
Thank you.
So, sir, today, as you know, that every year budget brings noise, tax rumors, stock tips, and trading ideas. In your latest note on budget 2026-27, you look beyond announcement and focus on structural shift that can shape India's journey towards Viksit Bharat 2047. Sir, in one line, how would you describe Union Budget 26-27? Is it about announcement or is it more of a structural roadmap?
Thank you, Yash, for having me in this podcast. I endeavor to put across few facts and figures before investors
Okay.
so that I think this entire communication becomes, more meaningful. Yes, I think the budgets do come every year, and that's the intent of the government to give the direction to the economy. We have been witnessing this budget year after year. Governments after governments have come and they have succeeded with, the budgetary allocations, announcement, policy measures from time to time. Look back last 10, 11 years since this government is in power. I break up this part into three, a journey of 11 years into three parts rather. 2014 to 2019, 2019 to 2024, and 2024 to 2030. Meaningful journey of 6 years, which I'm trying to break it up into. In the first 5 years of the journey of the government, I think they ended up doing some of the most structural reforms, including GST, demonetization, bringing up, the entire infrastructure into forefront by creating the Sagar Mala projects, the Bharat Mala projects, power sector reforms, among all others. So the emphasis was clearly on infrastructure. Emphasis was clearly in the area of empowering the individual in the country. That was the clear emphasis. Jandan, Aadhaar, and mobile connectivity and direct benefit transfer also came in this particular period. So they actually laid down the foundation, if you may ask me, in first 5 years of the journey while building the Viksit Bharat nation, which we are talking about today. In the next 5 years, that is 2019 to 2024, the larger amount of emphasis was in the area of beating the challenges posed by the COVID. At the same time, I think the emphasis was largely in the area of attracting more investment into the country. So not only we vaccinated 140 crore people, but we also ended up inviting in those sectors, in the areas where I think up till now the country had locked itself up. That includes defense, that includes mining, that includes railways and electronics, manufacturing services. All of these areas, which were up till now not available, that's the time, when the government opened up these sectors. Having opened up these sectors, the clear intent was to infuse funds into the system and bring the output. No wonder today Apple sells maximum number of iPhone from India.
Absolutely.
And
Yeah.
I think that's what we have scaled up ourselves with.
Wow.
Now, the third era of this government has just started, and 2025 has started with an extremely turbulent global environment. The tariff-related issues, deglobalization, de-dollarizations have all started happening in the 2025 period. And as a result of which, this has created significant amount of stress within the global environment. And that's what is going to be the focus area of the government in this budget, as I see it. Given this background, I believe that the government's immediate priorities are A, stop rupee from depreciating further. So they may probably open up the country further in order to bring additional money into the country in the area of infrastructure, which I'm going to talk it out in a while from now. In the area of, attracting new investments into Indian markets. Government is also expected to ensure that the free trade agreements that it has signed with various European nations and among others Australia and all other European nations, and waiting to sign the bilateral trade agreement with America. In my viewpoint, I think this is going to be a roadmap given in this budget for government and the industry to work together to meet the objective of free trade agreements, under which higher amount of export thrust in the global economy, bringing more amount of investment into the Indian economy, in turn structurally protect Indian economy from vulnerabilities of the global outrages that is happening in the area of currency particularly. And out of compulsion as well, I think the larger focus of the government would be in the area of building the security mechanism first in the area of defense. I'm referring to. Apart from other allocations, I think the defense is also equally going to get the significantly large amount of attention by the government, so that I think the external pressures can be mitigated through the local manufacturing, etc. So I'll unfold some of the points I think as we talk further, I believe.
Yeah, sure.
But I believe that the fabric is let down for the Viksit Bharat in this particular period, and 26-27 budget is going to be architecturing the entire roadmap as I see it.
So let's build on that macro picture a bit more before we came to sectors. In your note, you talked about India's path from reform, perform to transform up to 2047. Where do you think we are on that journey today as we enter 2026, 2027?
So 2014, I think, and when I think we started, and as I explained the entire reform process in the three eras of 14 to 19, 19 to 24, and 24 to 29, I think India has reformed itself in the first 5 years. India has performed itself in the next 5 years and continue to perform now. And India is transforming itself in the next 5 years. This transformation is going to be in the area of like how we focused on building the infrastructure in first 5 years. In the second 5 years, I think we opened up, I think, the economy and the industry particularly. So we focused on building the industrial base, manufacturing base, export base. Next 5 years, that is the current period in which this government is driving the economy into, is largely going to be, I think, accelerating on those earlier two period of infrastructure and the industry, and create, I think, significantly large manufacturing alternatives to China in the world by India. And at the same time, I think beautifully created, unnoticeably, I believe so, an India's tech. India's tech is something which government has basically architectured in a very systematic manner. In our thesis of India's tech, we count 3 digital infrastructure and 2 physical infrastructure areas on which I think the larger amount of opportunity the government is likely to seize in this period. The digital infrastructure stack started with UPI way back in 19, I believe, and now enrolling out the entire ondC, online network of digital commerce, which is a very powerful B2B medium or a platform for the e-commerce segment as a whole. In fact, e-commerce is going to be, I think, at least many times larger than the payment platform of UPI. So frankly, this is going to be a game changer, if you may ask me, I think, in next 5 years, wherein the global buyers and the sellers will come onto this ondC platform and transact with local entrepreneurs in buying and selling the goods and services. And to support this particular move of global trade, the government has actually started the digital currency in form of digital rupee. That is called central bank digital currency. So that whenever I think the trade takes place globally, the global trader has a confidence in form of trading into the local currency, which is a digital currency. It serves multiple purposes. On one side, I think government and the regulatory authority, that is RBI, central bank, they would know exactly where the rupee is moving from one end to another end. On the other side, I think the global buyers and sellers, traders, I think, would probably find it comfortable to deal with a country where the currency is completely digital. Okay, and that takes care of, I think, the crypto as a currency, because crypto as a currency is a non-viable alternative, I think, which the world is probably realizing. So today, as we speak, India trades B2B with at least 5 countries, and in the rupee value. And I think there are as many as 33 countries, I think, with whom I think we are likely to expand our trade. Today, more than 80 countries in the world have followed the example of India in building their own digital currency. So the de-dollarization process has already started. In my viewpoint, I think this is going to be the stepping stone of de-dollarization process. Next 20 years are going to be seeing the world completely differently. Dollar as a currency, the dominance is likely to be under threat in next 20 years for sure. And the two physical infrastructures take out of the five, three which I mentioned. The fourth one would be the Gati Shakti projects, I think the government which is building up in order to bring down the cost of logistic. Uh, China has set an example by way of integrating multimodal transportations, uh, railways, roadways, waterways, airways, uh, power, data. I think they have created, I think, a multimodal transportation engine. And India is basically stepping into China plus one alternative. So logistic cost requires to be brought down. And that's where the government's Gati Shakti Yojana projects, I think, are basically playing a role. In my viewpoint, I think if these Gati Shakti projects are to be seen from the China comparison point of view, we are talking about bringing down the logistic cost in the country from what it used to be at 14% to well around 7-8%, which means on an economy of $4 trillion, if you are saving about 6%, we are talking about saving of around 250 billion odd dollars, I think, in form of the savings in the economy itself. And that's the reality that we are seeing. What does it mean? It means that I think the savings incurred in the area of logistics would result into transforming the industry to a better path, because our products and services could become very cost competitive in the global market. And I believe that's the way forward. If you are cost competitive in the global market, certainly I think the growth is going to be following for you, and a profitable growth and efficient growth will be following. And the last element of the stack is in the area of the power. As we see it, India has already surpassed the target of 2027 of renewable power in 2025 itself. In my viewpoint, I think the having set the target of 500 gigawatt of power, renewable power by 2027, I think we are likely to accelerate on this path faster. What it means, the renewable power, starting with green hydrogen, solar power, wind power, biogas, and now the small nuclear power plants, I think, which were also being allowed in the last budget under the allocation, and the new policies coming up on that. I believe that I think the power cost, as I see it, in next 5 years could come down to half from what it is today.
Okay.
So we could possibly see, I think, actual cost of power to the user minus the government levies could be somewhere around 4 rupees per unit, as against around 8 to 10 rupees per unit that they are paying today. So this is going to be game changer. So we believe that I think if I put the summary of all 5 stacks, India is possibly talking about saving and producing through the efficiency a value of somewhere around 1 to 1.25 trillion US dollars on an economy size of $4 trillion. So we are talking about 25% of the growth coming on current economy base in next 5 years from this 5 stacks, I think, which we talked about. And my take is that government is conscious about, I think, putting more resources behind it. So hopefully, I think you will be seeing the larger amount of picture unfolded, if not everything in budget, in a due course of time.
Wow. So we can say that India is entering this budget with a strong GDP growth, relatively low inflation, and a committed fiscal glide path. Why is this contribution important for India's positioning as a serious global asset class?
I have never come across, I think, a chemistry of what we are experiencing today. 8% and above GDP growth,
Yeah.
3% around interest rate, 10 years GSEC yield of around 6.7, 6.8%. Corporate sector growing in the vicinity of around 15 to 20%. Each and every area of businesses are growing at a speed which was never envisaged earlier.
True that.
In no time, I think we have built the world's largest startup factory in this country,
Yeah.
wherein I think the number of startups that has come up in the country, I think phenomenally more number of people. Surely because I think the number of people employed in the business, they themselves, I think they become power to the startup. And we are disrupting the globe today by way of creating the India stack, which I mentioned a while back. So in my viewpoint, I think this formula, this combination, this chemistry, as you may want to call it as, was never seen before, never experienced before. And if this chemistry is to survive and grow, we are talking about growing the size of the economy from $4 trillion to $12 trillion in
Wow.
next 10 years time.
That's a really big number. So everyone look at capex number of budget day. In your work, you also emphasize soft efficiencies like logistic, credit flow, regulation. For serious investors, what should they watch beyond the headline capex number this time?
Uh, More importantly, I think for investor, how the government is adapting a disciplined route is important. Against your collection of income from taxes versus the amount of money that you want to spend on various initiatives that we are talking about, that ratio is called as fiscal deficit.
Yeah.
So when your fiscal deficit, when your expenditure increases above your income, it is a time, I think, when the fiscal deficit situation gets worsened. Now, government in this development era, the growth era, has been extremely disciplined in the area of, I think, not allowing the fiscal deficit to scale up. In fact, we would not be surprised if in this budget they continue to bring down by 10 basis point or 20 basis point the fiscal deficit target to 4.2 to 4.3%, which means their spending has been far more disciplined. In fact, I think they've been encouraging higher amount of spending by the private sector. They have been taking a course wherein I think more amount of foreign investment can come into the country. They invest as against government investing, and at the same time, I think build the entire infrastructure. So this formula is working beautifully well. In fact, I think just not to load the numbers in this particular podcast, I feel that the allocation of money that they kept in the last budget, they have been extremely conservative in spending that kind of money. They have aggressively budgeted, but I think they've spent less, whereas they've collected more. Against their budgeted income, I think they are at least above mark in the first 9 months of collection of taxes, direct taxes, and they have given a phenomenal amount of purchasing power in the hands of people. Last budget, 12 lakh rupee worth of income made tax free in the hands of individual. Imagine a family of four, they enjoy 50 lakh rupees worth of income tax free in their hands. And the amount of purchasing power and amount of saving and investment power that it produces is phenomenal. The saving and investment is about 30% of the total GDP size. Assuming that 50 lakhs, I think out of which 30% is 15 lakhs goes towards saving and investment. Government is producing the surplus from economy within the economy itself, wherein individual saves and it invests money. At the same time, I think they noticed in the first 6 months that individual has started saving money, so they immediately brought in without waiting, I think, the GST regulation, which is basically keeping the GST rates now to mainly two rates, keeping all 99% of the items under these two rates, and bringing down the GST rates in systematic manner, so that I think the goods and services in the economy becomes affordable to the masses. They end up spending more, and in turn, when they spend more, government on a lower rate collects more. That's a formula that they put in, and I think this country has never seen this formula before. This particular formula has come into power. So in my viewpoint, I think the tax collection mechanism of the government has been far more efficiently working, and I believe that I think they have given more than what India asked for. from the point of view of tax collection, yet they are collecting more. They are spending comparatively less because the private sector is now being encouraged to spend. And with the lower rate of interest, in my viewpoint, I think the private sector will be putting across more greenfield, more brownfield projects in the area of spending. So overall, I believe that every spending that happens in the economy, I think it ultimately empowers the individual. So the industrial spending first, and thereafter, I think the individual spending thereafter. That's our engine which is working right now. I think this is a phenomenal era as far as the country is concerned and the prospects ahead is concerned. The government is very, very focused with the priorities, and that's a good part to observe. That the entire ministry of the all ministries of the government, I think they remain extremely focused on the objective of growth. So that gives you the confidence that Viksit Bharat is in sight, and it is not only in air.
Oh, that's really great insights. So, sir, you have used a very powerful phrase, the rupee 4 power revolution that you talked previously, where cheaper green power plus storage can change industrial cost. Can you explain how this one shift can rewrite India's manufacturing economy over the next decade?
So, well, again, I think power as a cost to GDP, if you end up saving 1% over a period of time
Yeah.
through this mechanism, ultimately it results into the higher percentage of saving in the hands of the industry. That is the simplest way of putting it across. Now, under the Kusum Yojana, PM Kusum Yojana, you have democratized the entire power generation activity from the grid to the rooftops. So, frankly, I think today 1 crore rooftops, if they have to produce the power, every single household in turn would be saving about 18,000 rupees of power cost every single year,
Okay.
right? Translating it to 1 crore rooftops, 18,000 crores is the amount of saving that is being given in the hands of people, which is again going into the economy for spending, right? For industry, it's a very, very systematic approach. You have the proven process of electrolyzer through which I think you can produce the hydrogen. Up till now, I think that process has not been functioning largely because of the fact that I think to produce electrolyzer, you would use thermal power,
Yeah.
which will be counterproductive. Now, with the solar cost operating in negative, today solar power for a captive user is operating in negative because captive user is basically using the entire power by himself. He is not buying from the grid, and whatever surplus that he generates, I think either he stores it or he sells it back to grid. So it is actually working negative.
Okay.
Now, with this particular flow of hydrogen power, I think which we want to produce by using the solar and the wind, in my viewpoint, industry will be extremely happy to buy the proposition of green hydrogen, and that green hydrogen would be used for the purpose of major power consuming sectors like refinery, petrochemical complexes, commodity businesses like the metal commodity per se, chemical commodities thereafter, or even the main power guzzler in the earth today, data centers. Data centers are the power guzzlers, and if the industry is getting the power at negative to max 4 rupee per unit kind of a cost in next 5 years, who in the world can beat us as far as our ability to produce and sell at a price which is unheard of in the other parts of the world? Today, America, through the tariff mechanism, is I think inviting the counterproductive situation in their own country. The goods and services and the inflation is something which is going up in USA. And if India is basically controlling the inflation and selling goods and services at cheaper cost, India becomes a formidable alternative to the globe. Who in the world will not buy from India? So,
Absolutely.
in my viewpoint, I think it's a big catalyst. Power as a cost is a big catalyst. It is going to be a game changer for sure as far as I think next 5 year journey for India is concerned. It would be very, very surprising if India do not register itself as the topmost efficient producer of goods and services in the world in next 5 years.
Let's see where India registers itself. I'm sure we absolutely will. So we all know ondC and UPI as retail platforms. In your view, how can these digital rail evolve from just payments and e-commerce into export and credit engine for MSMEs and services?
Well, today many global buyers they want to trade with India. However, the reach may not be allowing them to enter into the Indian markets largely because I think that becomes a costly proposition. Now, with the government promoted platform like ONDC, imagine a situation that there is a craftsman in Rajasthan or Gujarat, for example, producing the local craft, and those local craft I think finds demand from somewhere in the world. Up till now, neither that producer of craftsmanship would get a entry into the global market, nor the global market would come into India because of the reach prohibitions. Now, with this online platform, both of them meet each other,
Yeah.
and trade happens. And government is beautifully architecturing this entire subject. On one side, they already have existing mechanism under UPI, so the digital transactions are taking place for payment. So there is no risk of I think collection and receiving the money or paying the money. That is happening through the UPI mechanism. ONDC is an e-commerce engine where the transaction matching takes place along with the logistic part. So government and the ONDC platform has commissioned various logistics players today to pick up the goods from one end and deliver it to another end. Some of the logistic companies are actually operating in this case. And I think in last budget or even before the last budget, the government came up with a scheme of operationalizing the Indian postal services for last mile logistics. Now this is a fundamental shift. Today India is having in every pin code a post office.
Absolutely.
In the given situation, I think the post office's services have not become very relevant because we are more digital economies now. However, the last mile delivery of goods and services can indeed happen if we have the machinery like Indian Postal Services. And that's what they recognized. And so they are revamping these entire services, making it fit to deliver the last mile. Today, we in the cities and some of the tier 2, tier 3 cities also, we have started experiencing how the last mile services of quick commerce is helping us. The Zomatos and the Blinkit of the world, I think how they are helping us in getting everything at our doorstep. Imagine, I think, that particular service available for industrial products at the last mile level. I think the entire country can get covered. How we beautifully covered the entire country into mobile telephony. If this logistics connects the last mile, then probably I think buying and selling goods from any corner of the world, you may probably want to buy an artisan's product I think in your own home or offices, provided I think you can reach out to the artisan on the internet.
Absolutely.
And buy through the ONDC platform. In my viewpoint, I think the opportunities will be endless. And today we are seeing, I think many companies are riding on the ONDC platform. Companies like Hindustan Lever has done a successful entry into the ONDC platform. Their Shikhar app, I think, is basically helping them in improving the intake of the orders and at the same time efficiently executing it as well. So in my viewpoint, I think it's a beginning. It could possibly be a game changer like how UPI has been. UPI in itself, I think, is becoming a game changer further, I think, with a version 2 entry into the lending and borrowing markets. So which means that I think you are doing through the UPI the entire mechanism of credit lending, which is a phenomenal development which nobody in the world has probably experienced, which we are making it happen. So I think the opportunities in the digital era is endless, and the government is spending in a right manner to make this opportunity real, so that at least I think the entire population spectrum gets covered in the development of the economy.
Wow, that's a really summarized answer. So yes, we will absolutely love to see our artist onboarded for sure. So, sir, I've also seen like the budget is also expected to talk about China plus one, PLI, semiconductors, defense, and AI. If you had to pick two, three themes from this blog that can genuinely move the needles for India's global competitiveness, which ones would they be, and why, without going into specific stocks?
Well, I think they have already laid down the foundation. The entry of semiconductor has already happened. We had a crisis after 2021, wherein I think the semiconductors ran into shortages. Today we are facing the crisis of rare earth material, wherein in order to produce the chips, I think you require, I think, this rare earth material also. So government is expected to put emphasis on building the supply chain for the rare earth. Government is expected to even further incentivize the entire semiconductor business. Already the leading names have started implementing the projects in the country. It's only a beginning. uh, India has a reputation.
Yeah.
India has a reputation of entering late into the system and then create disruptions which is never seen before by the universe. And they bring down the cost structure and efficient delivery mechanism is built in. That's what I think we are expecting out of the semiconductor foray, the rare earth foray that the government is promoting today, and likely to get further emphasized in the budget which is coming up. The data center and computing part is never easy. It's a complex most job. The globe is going to experience in next 5 years about 250 gigawatts of data center capacity coming up. India currently it is about uh, 45 gigawatts. So I think we're talking of 5 times growth. India is expected to I think come up with around 7 gigawatts of data center capacity eventually. And if this kind of capacities are built in the country, in my viewpoint, I think we are the largest users of the internet on the earth.
Yeah.
We are 140 crore people out of 800, right? Between India and China put together, we hold about 20% plus population of the country. Almost, I think we ourselves, I think, hold this population. Together, I think 40% population it would be. Now, if you create the computing engine in form of data center in your own country, that means the data stays local and they do not cross the border, which is fundamental because it is this data which ultimately drives the next level of growth, either for enterprise or for even individuals that matter. So, in my viewpoint, I think that is imperative. The data center needs the lower cost of power. Data center needs, I think, the AI way of computing. And India is a factory of computing. India is promoting AI computing like nobody else is doing before. In fact, I think very surprisingly, you find today commercials running on the TV screen wherein ChatGPT says that I think use me, wherein Gemini says that use me, okay? And it is the users who are basically contributing to building of these particular data models. So, AI factories coming up, for data center factories coming up, semiconductors coming up, and these are all beginning eras. I would be superly excited to see how government is allocating money to what they did in last 5 years to building the infrastructure. Can they build the digital infrastructure through allocation of higher money into these areas? Answer should be yes. Answer will be yes. We'll have to see how exactly the figure comes out. But this is going to be only a beginning as I see it.
Okay. So from a market point of view, how are you looking at the bond side with the fiscal glide path and index inclusion, and the equity side in terms of possible sector rotation after this budget? Again, we are not talking about stock tips, just broad directions.
Expectation here would be that I think how government installs the machinery to prevent rupee from slipping against the dollar. It is the currency which is basically unnerving the entire investment situation in the country. Global investors get extremely disturbed when your currency slips. And unfortunately, I think our currency has fallen in last 1 year despite of better economic progress, largely due to the fact that I think the tariff related issues have hurt us more than anything else. And government's main worry, if I may say so, will be in the area of I think how to prevent this situation, how to I think protect the currency from falling further, how to ensure that it is a gradual depreciation, if at all it is a depreciation, but not a rapid fall the way we have seen it. And that's something which I would like to see how exactly they address this situation in this budget. If they do end up addressing this situation in the budget in whichever mechanism that we are talking about, I think that would be again I think another move that the government will probably write in the history of the country.
So, sir, the last question that I have for you, this is a very important question. Like retail investor often chase the volatile day of the budget day. From your 4 decades in market, what is the sensible way of them to use budget 2026-2027 information in their financial decision over next 5 to 10 years?
Budget is a direction provider, is a policy statement. It gives you clarity so that at least I think you can buy or invest with confidence. I think budget is not the day to react. Remember one thing very well, that reaction is throughout the year. There is no need to react on one single day. Rather than that, I think listen to the budget, listen to the intent of the government, listen to the policy statement, absorb the entire information flow that is coming on to you, and then calibrate your decision making process by way of structuring your portfolio for long years. Now, this is extremely important. You need to calibrate, I think, your decision making process by way of investing for long term. Most of the retail investors have been always found, chasing the momentum, entering the market only when I think the momentum gets built up. In fact, I think when the market falls, they should be in the market. It is always the other way around. I hope as the maturity grows, they will probably understand this subject far better. They have been disciplined in putting money through the SIP route, which is already 30,000 crore. I believe that I think if they become disciplined in structuring, nurturing, and managing their portfolios with a planned approach, I think next 10 years could possibly multiply their wealth by 3 times to 5 times.
Wow. Thank you, sir. That was a very clear macro to market view of budget 2026-27. For everyone watching us or listening to this podcast, it is just a snapshot. If you had like to go deeper into numbers, themes, and sectors by implication, do read Deven Choksey sir's budget article link in the bio. Don't forget to like, subscribe, and share. Thank you so much.
Always pleasure. Thank you so much.